Let's bring in our next guest to get more on the sell-off. Let's bring in John Stoltzfus.
The lawyers don't like Moby Dick?
No, playing music that we're not supposed to. We're going to move on here. John Stoltzfus, the Chief Investment Strategist at Oppenheimer Asset Management. John, great to have you with us. Hope you enjoyed that music. It's probably the last music we'll ever play on the show. What did you make of today's tech sell-off in particular, and just the action in the market today into the close?
Well, I think, Melissa, from a point of view of literature, last week was probably Great Expectations, and today was Oliver Twist, in terms of the darkness. I think we've got to figure tech was just waiting for some kind of a trim and a haircut, maybe even a shave. Got a little bit ahead of itself. We would have to think that technology remains a great place to be. For longer-term investors, probably this begins to present an opportunity for looking for babies that get tossed out with the bathwater if this goes on for a few days. But overall, we'd have to say it was a change in sentiment that occurred fairly quickly because of all the things the panel members all mentioned ahead, whether it was coming from the Fed, whether it was coming from what nobody mentioned, Dr. Fauci or Gottlieb was on an ICE call today. The medicos are not saying this thing. They're saying it's a long way home from where we are right now, and that the openings around the country may be too early, and it could be a serious setback. And the market got nervous.
How should we think about opportunities in the market, John? Because it does sound like you're saying wait. I mean, this is definitely not the opportunity to get in at this point. But I mean, are you thinking in terms of valuations, or are you just thinking on pure percentage moves? Down 10%, that's a good time to get in. I mean, how are you thinking about what this market should be valued at?
I've got to say, from a point of valuation, of course, the market valuation is fairly stretched. The forward multiple, somewhere between 22, 23 times. A lot of that is to be expected because you've got a situation where the market is as a discount mechanism, is looking ahead from when we get beyond all of this stuff, while analysts and consensus analytics keeps cutting ahead of the second quarter and likely even cutting ahead of the third quarter at this point. So with that happening, your multiple is going to expand. But I think it just got stretched last week. There was beginning to be a feeling like you would have expected people to start passing out party hats. And yet the news at ground level, so to speak, was not really telling you that it was a time to celebrate, but more to take a little bit of caution.
Tim, you got a question?
Well, John, I guess if you think about, again, we'll do the Zeppelin metaphor here. The song before Moby Dick on Zeppelin 2 is Ramble On. And it sounds to me like you think we have a dynamic here with at least mega cap Nasdaq stocks, which have been driving the rally, that they just need to take a breath, and they will ramble on further down the road because they are defensive.
Yeah, I think they do ramble on further down the road. And I think today one thing we saw very clearly is while the large caps sold off, boy, the smalls and the mids really took it hard today. And so I think the large caps, the mega caps, the Nasdaq, I think have more to come to the upside. But near term, it's a haircut, a trim, and perhaps a shave.
John, great to speak with you. Thanks for your time. Great. John Stoltzfus of Oppenheimer. Ramble On, that's a song, right, Guy?
Yeah.
Yes, Mel, it is. I can sing it if you want.
No, thank you. What's your take?
It actually has some Tolkien lyrics. No, my take is exactly that. The market did get ahead of itself 100%, but I've thought that for a while. So here we are again at this, 2850, 2900 level in the S&P, that 50% retracement that, bulls want to say is sort of a place we're going to leapfrog from. Bears, on the other hand, say we're going to roll over from. I'm in the we're going to roll over from camp. And again, I mentioned those 3 or 4 stocks because I think today's can be a really important day as we look at, a few months ahead. We can look back to May 11th or 12th, whatever today is, and say that was a day where these big stocks that took us higher, sort of the signal to take us back to the downside.
John was getting at this, but in terms of valuations, it's difficult because as long as the estimates continue to come down, that dramatically changes how you look at the market. So, Grasso, you always give technical levels. I would think that in this day and age, technicals may be even more important than in the past?
So I think Guy brings up an interesting point. When we've been talking about this 27.92 level in the S&P cash, that is the 50% retracement. Just think about what that means with psychology. You've got half your money back. You saw everything fall off a cliff. You've got half your money back. Those names that really did the heavy pulling are sort of running into resistance. They didn't lose half their value. But if you're sitting here saying, I could have went broke on this sell-off, now I've got half my money back, it's a logical place to take some profits. But think about passive investing. Think about ETFs. Think about how many ETFs hold Apple, hold Microsoft. So all of these names, when people start diving into tech, those are the names that rally the most. So do I think we lift off from here? No, I think it's a good place to take a breather and see how the reopening process works out. But ultimately, the Microsofts and the Apples and the Amazons will lead us higher once and yet again.
Karen, you think we're in a holding pattern for now?
Well, if holding is like a few percent more or less, then yeah, I do. Before, I think it was Tim who said earlier, we don't have earnings right now to look at, so it's sort of more macro things. But I just come back to that enormous run. I mean, finally, we did see the VIX actually spiked 5 today. I don't think it was a one-day thing. So I think that holding, but down 4 or 5, that wouldn't be shocking. 4 or 5% wouldn't be shocking.